In this video, you will learn how to keep yourself out of trader's prison. You will learn the truth about supply and demand, which will very likely send shivers down your spine, and you will discover the method to consistently win at trading, which undoubtedly will have a positive impact on your financial future. Supply and demand, an idealised view. The perception that most have is when it comes to rising and falling prices, an image such as this, where we where supply is shown by vertical bars matching the falling price, and likewise the demand shown again with the vertical lines matching the price. In a pure supply and demand environment, without the intervention of any side forces, this would be a fairly good representation. Let's now have a look at manipulated supply and demand. Now here with manipulating, things look very different. What happens here is that when a broker calls to tell a trader to buy, they will be, by the very nature of that call, causing higher prices, as the momentum takes over and traders see on their screens that indeed the price is rising, so they start to develop beliefs that they should buy into this stock. This adds to the rising price, which is marked up higher and higher to capture larger and larger profits from stock that has been earlier accumulated by the market makers. Far from being driven by pure supply and demand, the stock market as a complete whole is driven on the manipulated supply and demand. Now, before you start to think this is all rigged and you just can't compete with these market makers, you need to stop and have a think about what's going on here in the larger scheme of things. Because there is a simple truth here, which is this. This business is not about you making money. It's not about me making money. And when you come to that realisation, you will have quite an intrinsic understanding of what's going on, without even having all the information yet at this stage. But hopefully you'll start to think, hang on a minute, this is an industry here, and this is not about me being a trader, okay? This is not about you making money. This is about the market makers running a business. So everything we've talked about so far, accumulating the buys, accumulating the sells, and all that information we've covered so far is all about the market makers running their business. Their business. This is not you trading. The purpose of the business, we know what the purpose of the business is. The purpose of the market maker's business is to produce profits. That's it. It doesn't go beyond that. There's no altruistic here. There's nothing for the good cause of the planet, whatever. This is about making profits. Okay? And important, this bit down here, very important, you are part of their business. Okay? Their business model. You're part of it. And this business model could not exist without you. Very important. Just really understand this. If we could encapsulate everything, really, that what I'm going to be teaching you over these coming lessons, if we could encapsulate that anchors into your mind. This is probably the single most important piece of information that I can impart to you. Is that this is not about you making business. This is a business model that exists without you, and the purpose of the business model is profits, and you are part of their business. Okay, so at this point you really you get to choose one of two paths. It's as simple as this. You're going to go down one route, or you're going to go down another. Which route are you going to take? Two paths, two routes. Okay. Most traders, and I've got these percentages up here, and these are roughly around about the right percentages. 95% of traders believe that trading is their business. It's what they do. They're the traders. They're in control. They trade the market. It's their business. Okay. These traders view the market from the outside in. They look at the market from the outside in. They observe it. They observe what's in front of them, and they trade that as their business. The other 5% understand completely, intrinsically, that this is not their business, but it's their business, the market maker. It's over there. It's their business model. It's the market maker's business model, and they come to appreciate that by accepting that and by working with the market maker's business model, they will achieve success. They don't care about themselves running a business. They don't care about whether they're the ones that proceed. They're not saying to anybody that I'm a trader, it's what I do, it's my business. Yes, they may carry out the act of trading, but they're carrying out the acts of trading relative to the market maker's business, not relative to the facade on a chart, or a chart they see. Every trading action is relative to the market maker's business. They're like the limpet that sticks on the side of the whale cruising the oceans, if you like, or the liners cruising out, the limpets, or whatever it is, that the barnacles that stick on the side there. And that's what they are. They attach themselves to the market maker's business model, and that's how they actually achieve trading success. So a section summary. In this latest section, we had a look at the structure of the markets as being like a market stall. We had a look at who the market makers are. We had a look at the role they play, the perks they enjoy, and how they use that information to their advantage. We also looked at the outside perception of supply and demand, and how this is manipulated, and how the setup of the markets as a whole are a business with the sole purpose of profit generation. We started to also get a glimpse of how we as traders are part of their business model. And finally, in this section, we looked at the choice of paths you have as a trader. Now, in part 2 of this course, we're going to get right into the heart of how the market makers run their business and how you are going to interact with it. "6 weeks to trading prison," which is sort of a bit of a contradiction if you think about it in its way, because what I'm talking about is about trading freedom. It's about achieving financial freedom, becoming free to do what you want to do in life. And just as a side note there about my own situation there, I can honestly say to you, I never set out to be a trader, 20-year trader. It's not what I wanted to do. Trading for me was, I had specific goals in mind. I simply wanted to earn enough money to enable me to do the things that I really wanted to do. As it happened, I ended up spending quite a lot of years in trading, as it were. But whilst I was in trading, of course, I wasn't always glued at the screen. After about 5 years, when I really understood what I was doing and I really got on with things, I was able to move off and live in a different country in a warmer climate. Left England, went to live in Spain. And so for me, really what I'm saying is trading was a means to an end. Now, whether you want to make a trading career, that's okay, that's fine. But if you want to do like me, you just want simply to earn enough money to then go off and do what you want to do, again, that's still a great aim. But what the reason I've put this up on here is because many traders, when they start off, you'll find that and obviously you yourself, you'll perhaps discover that you can do no wrong. You sort of look at the market, you start trading, you draw up a few indicators, and you pretty much make money. You become successful. What happens though? Where does it go wrong? What starts to sort of bend things around and mess things around, so much so that you get to a point where you're not making money and the whole thing turns into rather an unpleasant experience? Well, basically what happens is when you first start off, you're sort of raw, you don't know anything too much, so you simply see things in front of you. They make sense because you haven't got anything to draw from, any past history, if you like, to do with your trading, and so you act and carry out your trades. But gradually, over a period of time, you become imprisoned, and that's what happens through here. And I reckon that this happens from experience and from talking to other traders over many years, around about 6 weeks, and they end up what we call trading prison. And what happens in trading prison, or what the causes of getting into trading prison, are a loss of confidence. Now, the loss of confidence is going to come about as a result of simply getting into the market. You're making a bit of money, then you're losing a bit of money, making a bit of money, and so this cycle perpetuates. But gradually, rather than your account going up like this, your account starts going sideways and actually starts to go down. So you start to lose confidence in your ability to read the market. Now, and a loss of confidence will cause a lot of mental turmoil. You will end up with feeling confused. It's a very unpleasant feeling. You've got, I call it like the dual voices going through your head. Should I or shouldn't I? Should I or shouldn't I? Should I buy? Should I sell? Is it going to go up? Is it going to go down? So you start getting all this mental turmoil going through. Emotional issues. I've got these emotional issues down here because trading can become a very emotional experience. Now, we're going to be talking about emotion because that's quite a big issue about people trying to get emotion out of trading, and that's a sort of a trading truism that we come into later on. But I'm talking more about the emotional issues that can come. You can become quite emotionally engaged, and also even when you're disengaged from trading, that emotional negativity can sort of hang on to you as well. Relationships, often overlooked part of trading. If you're trading, you're in a relationship, you're married, relationship, whatever, you do have this other person to consider, because often what you'll find with trading is you can be sitting for extended hours in front of a screen and you're sort of isolated, and then sometimes the question is asked, what have you done today? Maybe you haven't done anything, and it's like you haven't been working. Of course you've been actively looking at the screen, but may not have been any trading opportunities. And so relationships are something that needs to keep an eye on. And this sort of thing can also cause quite a lot of problems as well. If you're not comfortable, not happy doing what you're doing, or your partner's not happy doing what you're doing, this can cause a lot of pressures as well. Blind alleys I've got down here, because blind alleys, you can, as you start to deteriorate, or so your trading starts to deteriorate through the 6 weeks period, you can start going off and looking at other things. All sorts of weird and wonderful things that sound good at the time, or you're looking at them in terms of how they may lead you away from the situation you're in, obviously to going forward into a profitable situation. And so you often experience a lot of blind alleys, and of course these all have the effect of causing this prison-like environment in your mind. And finally we sort of got rid of the pain, anxiety and anger, and that sort of those last three sort of build up into a culmination of a situation where it's quite unpleasant indeed. So these are all a barrier. So this barrier becomes created to the wealth and success that you actually want from trading. Now, of course, I quite realise that wealth for some people is quite different from another, and that's your own. We won't go into that. That's really, wealth and success is for what it means to you personally. Okay, so what we're going to look at now is the barrier and what actually causes that barrier to arise. Okay, the barrier is actually created by market perception, your perception of the market. And the perception of the market is gradually, when you get to around this 6 weeks period, is that you need to remove this emotion from your trading. And the reason you get to that point is because all the chat rooms and the forums and everything else are saying to you that it's emotion that causes the problem. You've got to get this emotion out of your trading, and that will resolve the issue. And that's a perception of the market that is entirely wrong. You're never going to remove all that emotion from trading. Let us say you're never going to remove all the emotion from trading. You don't want to, because part of that emotion is good emotion. You want to be feeling good about what you're doing. You want to feel good about your trading. So emotion's a great thing to have in your trading when it's in a positive form, and that's what this course is about: is getting you into that positive frame of mind. Now, and of course successful. And so the perception is they want to remove this emotion from your trading. Now, another thing is mechanicalized system. The perception is that if we create a mechanicalized system, then we're completely disjointed from what we do. We can create a mechanicalized system. The computer can tell us what to do. We push the button, or even the computer pushes the button, and then it trades off and deposits automatically money into our bank accounts. Now that's a utopia, and that's of course a lot of things that's sold with that concept today, and that is a complete fallacy. But we'll get more into that later on. Okay, so mechanical systems will then be looked at. And also the perception is that trading technical analysis skills, if you develop more technical analysis skills, the perception is you'll become a better trader. Now I can tell you that I've met a lot of traders throughout my years. Some of them have been what they call fellows of the Technical Analysis Institute, people like that. And these people know absolutely everything there is to know about technical analysis. Unbelievable huge amounts of information that they hold, and they can reel off indicators and everything else. The acid test is, of course, do they make any money? And the answer is many of them absolutely do not. And I've yet actually to meet one who has made consistent money. So technical analysis skills, the more technical information you get, the perception is that it's going to make trading easier for you. And the last one down here, we've got a personal system. There will be a lot of people who say to you, or a lot of information we see, that you need a personal system. You need a personal mechanicalized system that will remove emotion, and you can develop this with trading technical analysis skills. A personal system will be something like, people would argue that it takes in consideration your aversion to risk. It factors in what you perceive to be a threatening environment or a non-threatening environment. Something that cycles around you as an individual. And of course that also sounds rather good when you think about it, because It's saying, okay, well, this is a bit away. This is a wide sort of area here. It doesn't really apply to me. But if I take this and I make this as a personalised, tailor-made trading solution for me, that's got to work. So again, the perception of this is, by putting all these together, you will overcome or remove this barrier. Now I've got down the bottom here this big word down here, absolve. What this is actually all doing here, the perception is that if you get this done here, this will absolve you. You will be free, you will stand back from your trading. In effect, you'll be absolved of responsibility. And you'll often hear traders who say something like, my system told me to buy and I bought and that's it. And you can ask them, well, but if you knew it was not going to do it, why did you do it? Well, my system told me to do it. It wasn't me, it was my system. I'll get back and retweak the system, as it were. So basically, all this is absolving you from the responsibility. Or that's the perception, that it is absolving you from responsibility. Okay, so method to win. In order to trade the markets, you need a method to follow, a foundation upon which every trade is taken. Without this method, you'll be literally winging it from one trade to the next. Method also gives you a structure that you can rely on to bring meaning to the trades you take. Now you could of course design your own method of trading. I mean, after all, around 95% of traders do exactly this. They call it their method, their trading strategies. Throughout thousands of strategies, all designed around bar shapes and chart patterns. Trading the Market Makers method means you'll be trading one single method that you will observe to be the truth about trading every single day that you look at the screen. I wish I could say that I invented this method, but the truth is the Market Makers method is something I discovered. Something that exists without me, without anyone inventing anything. It's simply there in the market and is the market, so to speak. Now, trading the Market Makers method means that you'll be trading the structure of the Market Makers business. This is their business, and we only want to know how to interact with that business. But before we get to that, let's have a look at some other trading concepts. Trading methods. There are as many trading methods as there are traders, but we do not have the time, and neither would they be of value to dissect here, because they'll fall generally into one of two camps or a mixture of both. We have the fundamentalists who look at the fundamental perceived value of something, and we have the technical analysts who look at technical indicators. Both of these can be reduced to looking for patterns to predict the future, and people like nothing more than patterns. It's how we're wired. It's how we bring sense and meaning to the world around us. We develop patterns of thought, patterns of action, and even patterns of non-action. Now, in our normal day-to-day environment, this works great. It keeps us alive each time we cross the road, for example. Now, in the trading environment, patterns are abysmal for guiding us because of one underlying inconsistency, which is the patterns appear to retreat, but the content of those patterns is never the same. What this boils down to is this: if you're trading what appears to be a repeating pattern, you're trading something underlying of that pattern that is completely different. Let me try and explain this concept. Let's suppose in 500 traders with thoughts about the future action trades that cause the market to move in a certain way, and in doing so cause a pattern or shape on the chart. Later that pattern ultimately proves to be a market turning point, and let's say the market goes down. Now this shape is now registered in your mind and on your charts. It's a fixed reality. This really did happen. Now when you see this pattern again, your mind says, aha, I know what's going to happen now. The market is going to go down from here. You can even program your trading software to recognize this pattern and trade it for you. Now this is what 95% of traders do. So why do 95% fail? The reason has to do with content, something that we'll be exploring more in depth later on. But basically the content of that pattern will never be the same. Unless you had the same, say 500 traders with the exact same thoughts at the exact same time, carrying out the exact same actions. Clearly an impossibility, especially when you consider that we'll be talking about thousands of traders and maybe hundreds of thousands of trades. If you base a trading method based on a pattern that has no consistency from content from one trade to the next, how can you expect to get the same results? You can't, and therein lies the problem that is completely glossed over with pattern trading. You know, it's said the definition of madness is doing the same thing over and over whilst expecting different results. From a trader's perspective, this works the other way around, because the trader who is trading a repeating pattern is actually trading different content but expecting the same result every time. Traders' tools. Traders use all manner of ideas and methods to try and trade successfully. One thing they have in common is the tools they use. Now the most common is the candle chart. Nothing wrong of itself, unless of course one is trading patterns, which is exactly what candles are all about. But it goes even further than that, because traders over the years have even given names to individual candles that result in a particular shape, for example. Now ask 10 traders what these names mean and patterns, and they will give you 10 different answers, none of which will provide you or them with future direction about the market. Something that's actually rather important, an important part of your success. Of course, we don't have the time to examine all candle names and patterns thereof, but neither do we need to. However, it's worth me emphasising at this point that I am not saying that candles are useless. I'm not saying you can't trade successfully with candles. What I am saying is that you cannot trade successfully with any charting concept if you're basing your trading on pattern recognition. Now, traders are given all these charting tools free. They're given free advice, free courses, free broker accounts, free data, and the list goes on. Why is this? Surely this is worth questioning. Why would companies spend hundreds of thousands of dollars developing software and give it all away free? There's no such thing as a free lunch. So what is going on here? What is the game plan here? It seems to me that only a tiny percent of traders ever stop to even ask these questions. Questions that have a direct impact on their future success. This is all about deception. Okay, so you just learned how reading supply and demand correctly gives you an unprecedented advantage over other traders. You now know how to avoid 6 weeks to trader's prison, you know the method to win, and you know the content of every single market move. In the next video, video 4, you will discover the Great Deception, which reveals why trading is hard for those that don't understand this deception and why it becomes easy for those that do, when you use it to your advantage. Now don't forget to post any questions or comments and I will personally respond to you. Okay, let's get on to video 4, the Great Deception.